Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Terry White. Thanks for being on the show, Terry.
Thank you, Whitney. Looking forward to it.
Terry is the founder and owner of Southwest Trust Incorporated. He received his BBA from the University of New Mexico with a concentration in accounting and began his business career as a controller for the largest title company in New Mexico in 1983. He was also appointed by the governor of New Mexico to serve on the board of the New Mexico Finance. Terry, give the listeners a little more about your background and what you do exactly.
Great. Well, one quick correction, Whitney, and don't feel bad because I get called a lot worse, but we're Sunwest Trust, not Southwest, but that's all right. Not a problem. My wife doesn't even sometimes know what the name of our business is. So
you're not flying a plane, huh?
No, I'm not. But so anyway, we, as you said, I own a trust company. We specializes in self-directed IRAs. I also own an escrow company where we service owner financing. So anybody who sells their house and decides to play as the bank and receive monthly payments, we service those kinds of things. And I've been doing that for about 30 years. So I'm pretty well versed in real estate and real estate investing. And then through the trust company, we allow people to invest in anything that the IRS does not specifically prohibit. And so just for information purposes, the only thing you cannot invest your IRA in is life insurance and collectibles. So everything else is available, including real estate syndications.
Nice. So Sunwest Trust, that is that the same as, when people say, I'm a custodian?
Well, yeah. So since you brought that up a little bit, people that are looking to do what's called a self-directed IRA, it's been termed that, and really what it is an IRA that you want to invest in non-traditional assets. So if someone wants to invest in stocks, bonds, mutual funds, they would go to a brokerage house or their bank and do that there. If they want to invest in something other than that, and I'll just use you for an example. If they want to invest in a real estate syndication, your brokerage houses won't allow them to do that. So they would need to find what's referred to as a self-directed IRA, Custodian, to do that. And there are basically two types out there. Just for education purposes, there is a custodian, which we are a licensed trust company. And so because of that, the IRS requires that you have a custodian. So we act as custodian, but there's also a thing out there called a third-party administrator, or a TPA. And so that might be a company that puts themselves out there as someone that can handle a self-directed IRA, but they have to use a custodian to actually hold title to the assets. So I'm not saying that someone shouldn't use a TPA, but I'm just saying do your due diligence and know if you're dealing with an actual custodian, which would be a trust company or a bank, or you're just dealing with a third-party administrator that doesn't have the regulatory oversight that we have as a trust company.
So why would somebody use a third party like that? Are there any pros to doing that?
Well, like I said, the IRS requires that you have a custodian to invest your IRA. So you don't have a choice. If you're going to invest your IRA, you have to use someone. I don't know of any advantage for the investor, for the IRA owner, to use a third party. Most people just look for, maybe they may not understand the difference between the two, and then they look for prices, for what it costs. And so a third party administrator, because there's no regulatory oversight and no audit requirements and all that kind of stuff, they might be a little less expensive. But I would encourage people, if they want to do a self-directed IRA, to get out there on the Google and look at everybody's prices. And they're all a little different, and the way they charge is a little different. So depending on what a person is wanting to invest their IRA in, one custodian may, their fee structure may work better for that than another. So I would encourage them to get out and look at several of them. Don't just pick one and go with them. Look at several different ones and choose the one that works best for what you want to do.
Okay. Well, maybe we'll talk about the fee structure and how they charge in just a minute. But
Sure.
how would I know if I'm speaking to someone who's an actual custodian as opposed to a third party administrator? What should I be looking for?
I would ask the question. I would say, are you, when you're talking to someone, are you the custodian or are you just a third party administrator? I mean, and if they say, no, we're just a third party administrator, that's fine. But I would ask them, who is the custodian? Tell me who the custodian is that's going to actually hold title to my assets. And in every case, that has to be a bank or a trust company. The only thing about third-party administrators is in the past 10 years or so, there have been a couple that have gone out of business and run off with quite a bit of money. And again, that could have maybe happened to a trust company, but it's less likely because, I know my trust company, we get audited once a year and they require us to have several other types of audits all the time. So we have someone looking over our shoulder almost all year long.
So let's get into the fees and the how they charge and fee structure a little bit. What does that look like?
Well, for the most part, there are going to be maybe three ways that a custodian will charge you fees. Number one might be they would charge you based on the total value of your IRA. So they may say, if your IRA is $50,000 or less, there's one fee, and then $50,001 up to $100,000 is another fee, and just have a scale that way based on asset value. The other way they might do it is they might say, okay, we're going to charge you. We don't care what the asset value is, but we're going to charge you for every different asset you have in your account. So me, for instance, I own a real estate contract in my account. I own some gold. I own some actual stocks. So I would have to pay additional fees for each one of those different kinds of assets. The way that we charge here at Sunwest is we just charge a flat fee. We charge $275 a year. We don't care how big your account is. We don't care how small it is. And then we charge a per transaction fee. So as you have us cut checks to make investments for you, we charge you $10 every time we cut a check.
So if someone's going to invest in a syndication and they decide, they get the information, from the deal sponsor, and then they say, okay, I want to move forward with investing in this deal. And, but okay, I'm going to use my IRA. When do they contact you, or what does that look like? Kind of take us step by step through that process of contacting you and what that looks like.
Usually, Whitney, they wait until the last minute to contact us and they want everything done yesterday. So, but in an ideal world, they would contact us. They might talk to you. Let's say you're going to be the syndication. What do you call it? Syndication?
Deal sponsor or syndicator.
Deal sponsor. So they would contact you and figure out that, this is something I want to invest in. And then they would get on the internet and find what custodian they want to use, and they would make application. Now it's going to take probably, I say typically 2 weeks or longer to get the money from their existing custodian into our company. So they would fill out an application, set up their account with us, and then we would ask the existing custodian where they have their money now to send their money to us. Now, they don't have to move the entire account. So let's say you've got an account with a brokerage house and you have, let's just throw out $100,000 in it. But they only need $50,000 to invest in your syndication. They could leave the account at the existing custodian open with $50,000 invested in whatever it's invested in, and just move $50,000 to the self-directed IRA custodian. Once that money gets to the custodian, then they would direct that custodian to make the investment in your syndication. So the custodian then is going to ask them to provide certain documentation. Basically whatever kind of documentation you're going to provide to prove that they own something and what they own. I'm not familiar with a syndication, and maybe you can enlighten me as to, if I invest in a syndication, what do I actually own? What am I buying?
Yeah, I mean, the investor is going to own equity, in the deal, and usually, however it's set up, I mean, the distribution is going to go obviously right back to their to the custodian or in their IRA. Exactly.
So they may own a tenant in common interest in the property.
Yeah, I mean, they'll own. Yeah, they'll have some equity in the deal.
Okay. But I mean, what do they take ownership of? So if, I guess, and tell me if I'm wrong, again, I don't know much about syndications, but do you, it seems like it would be, kind of tough to give a bunch of different investors a tenant in common interest in a property. So I would assume that you probably form an LLC or something, and the LLC owns the property?
Yes, that's correct.
Okay.
That's correct.
So in that instance, then the investor using their IRA is purchasing membership units in the LLC. And so that's what we would request. We would request, the articles of organization of the LLC and maybe a subscription agreement, and then something saying they own X number of units of the LLC. And then you're exactly correct. As the syndication investment creates income, or however you do that, either through rental income or turning around and selling it, whatever you do, that income comes back to the IRA in either the form of distributions from the LLC or maybe repurchase of the membership units.
Yes, that's right. And yeah. I didn't hardly understand your question at first, but yes, that's right. It is, the LLC owns the property. Then investors are completely passive. They're limited partnership.
Yeah. Yeah. So you might do it a limited partnership. You might do an LLC, various things. But basically, as the custodian, we're just going to want to know what we're buying, what the client is buying through their IRA. And we would want to know what kind of proof of ownership we would have to prove that they own and how much they own of that particular investment. Does that make sense?
Yes. So you're really helping protect that investor, correct? Or not so much.
Not really.
You're making sure they got the documents that they need. Anyway.
We're making sure that we have the documents that we need. I'm very careful about using that word protect, because we don't, I don't know if you're really investing in a real piece of property. I don't know if it's in a swamp. I don't know anything about it. We don't do any of that kind of due diligence. Then that's one thing that I think is so important. And, we've talked about it a little bit before the show, is that investors need to educate themselves as to what they're investing in. I wouldn't really want to invest in a real estate syndication if I didn't understand the basics of how real estate creates income. If I didn't understand that you're going to buy an office building and they're going to have people renting the office and that creates income, and after we pay expenses, there's money left over, or you're not doing that, you're buying something and fixing it up and turn around and selling it, whatever you're doing, I think it's very important for the investor to understand how they're supposed to get their money back and make a profit. And if they don't understand that, personally, I don't think they should be investing in that type of a situation.
No, I like that a lot. I'm glad you said that, because I feel like it is our job to educate the investor and make sure they're educated, about what they're investing in before they invest.
But with us as a custodian, as a self-directed custodian, ultimately the decision is up to the IRA owner. Sunwest Trust, or any custodian that you find out there, any self-directed IRA custodian, is not going to help you in any way or give you advice in any way about whether to make a particular investment or not. It's just strictly, and all the documentation that they'll sign when they're opening an account, either with Sunwest or someone else, explains to them that you're making your own decision, you've done your own due diligence, and you believe that this is a good investment.
Who is Vinnie Chopra? Came to the U.S. from India with $7 in his pocket, and today he has created a portfolio of over $200 million in commercial real estate. He's a CEO of 5 companies, acquiring and managing diverse multifamily portfolio of 3,500 units, and his team self-manage all the assets. Vinnie has walked the walk with over 26 successful syndications during multiple economic cycles, including downturns over 12 years. He has built a very extensive educational academy to teach and mentor investors. Vinnie, tell us about this Multifamily Syndication Academy.
Thank you, Whitney. Thank you so much. I'm really proud to really talk to everybody about this extensive multifamily academy that teaches new and sophisticated investors how to use other people's money through syndications. That has been my world, to buy apartments from 50 units to 500 units, and how to select emerging markets, how to do deal analyzing, investor education, other people money, syndication blueprints. Everything I have learned, I teach in this academy, and over 500 lectures. and also how to manage the assets also, and along with lots of great templates and PowerPoints, everything. And I personally also mastermind coach all my students every Wednesday. So to reach me, Whitney, all the students have to, or investors have to just text the word learn, LEARN, learn to 474747, or call my team at 925-766-3518.
So, as a passive investor, what are some mistakes or red flags, anything that they need to know about, when considering investing with their IRA?
I would just, again, getting back to that education and understanding what they're doing. Because an IRA is something that you start and you create, and you can't really use the money until you turn 59 and a half. A lot of people make an investment and then forget it. And so you have to understand, if that's what you want to do, make an investment and then kind of forget about it, go to a brokerage house and get a stockbroker and get him to invest in some mutual funds for you. And, you'll probably do fine that way. But if you want to be actively involved with your IRA, with investing your IRA, then educate yourself and find something that you understand and that you are interested in, frankly, and invest in that. The pitfalls I see is when people invest their IRA based on a phone call from somebody that tells them they're going to pay them 25% interest. And this is, if you ever hear the word guaranteed, this investment is guaranteed, run from that as fast as you can, because you and I both know there is no such thing as a guaranteed investment. Everything has risk. And when you hear these high interest rates, things I see a lot is, when you hear 18, even 15, 18% in today's marketplace, that has to be a risky investment because, I went to school and they taught me in school that risk and reward are an inverse relationship. The higher the reward, the higher the risk. And so you're not going to find something that's guaranteed and pays a huge rate. That's a red flag. That's the first thing that you need to be concerned about. And so they just need to be careful. One of the things that I always tell people to do too, and it seems like it just should be second nature nowadays, but if you're considering an investment, if I'm considering an investment with you, Whitney, I'm going to Google your name and find out what's out there about you. And I'm going to Google the property. I'm going to get on Google Maps and see what the property looks like. All those kinds of things that, if you get a good enough salesman on the other end of a phone and you don't do that kind of stuff, then shame on you. That's just not good for you. I'm sorry. Did that come across on you, that phone call?
No, that was good. That was good.
Okay.
To Google the property and Google the syndicator or deal sponsor. I've heard a lot of people talk about how that'd be the first thing that they'll do, and it'll raise red flags, and they'll jump ship right then. But as far as investing with an IRA, and are there people that should really shy away from using their IRA as opposed to people that I don't know. I'm just trying to dig anything that would be helpful to somebody that's thinking about using their IRA, or maybe somebody that shouldn't use their IRA.
Well, one thing I think about is, especially when you're dealing with real estate, because typically, and I don't know how syndications work. I've said that several times today, I guess, but depending on their age, like if I'm 68 years old, I probably shouldn't be investing in real estate because it's a fairly illiquid investment. And the reason I pick 68 is because at 70 and a half, if you have a traditional IRA, you have to start taking what are called required minimum distributions. So if I've got all of my IRA invested in a real estate syndication or a piece of real estate or something, anything that's illiquid, it makes it impossible for me to take my RMD out. And there are some very severe penalties that the IRS imposes if you don't take your RMDs the way you're supposed to. So I would caution that depending on your age. The other thing is I would tell people, my big thing is to create a team. I think it's extremely important to create a team of people that would include my CPA, maybe my banker, maybe my investment advisor, maybe a lawyer. And then any investment I do, I would want to run it by some of those people to make sure, because I don't know everything. And so they might see something that I didn't see. And what amazes me is I don't think people realize or think about the fact that they're playing with their future. They're playing with their entire retirement. And so one little mistake there, one little loss could set you back a long ways. And so I think it's just so important to realize that, and given that information, use the proper care before you do something.
Terry, what's a way that that you've improved your business lately that maybe we could all apply to our business?
The biggest thing that we try to do in improving our business is, well, the number one thing I think is, if you have a business where you have employees, you have to value your employees. And we try to do that as best we can, because if I value my employees and I take good care of my employees, I believe that they're going to take good care of our customers. And so if we can do that, that's going to be, that's going to pay tenfold back to us. So I think that's important. I also think it's important to value our customers. And the other thing that I see all the time is communication is so important, to make sure that, a lot of times, because I do this every day, you might ask me a question that I think that, and I may give you an answer without really trying to communicate and making sure you understood what my answer was, because I do it every day. Syndicate real estate syndications, and so it's important to communicate to those people that you're dealing with that have never done that before, so that they understand exactly what's going on and how the whole situation is going to work. So we run into that quite a bit, because we deal with 10,000 accounts, and we have to realize that your account is your only account, and that's the most important account to you. No, so we do our best to try to do that.
That's a great point. Give us a way that you've shown your employees or customers that they're valued, like you're talking about.
Oh, that's a tough question. My employees, some of the things we try to do, we have staff meetings once a week, which I think shows them that we value them, because we put a lot of emphasis on training, so that when they're dealing with someone, they know the right answers. We do lots of silly things, like we cater lunch once a month for our employees that had birthdays that month. So I think next week we're having Olive Garden for lunch one day. Those kinds of things. And then we just, we try to support them as best we can and give them the tools that they need to do a good job for our customers.
Nice. And then what about communication? You talked about how, communication is I hear that often in different businesses, or even in other relationships of any kind, that it's key. So is there a way that you've improved that, or that you keep the lines open?
Well, we're working on it. I don't know that you ever get there. I don't know that we'll ever get there, but we're working on it. We're working on some new software that will keep lines of communication open between us and the client better. Again, a lot of times, like, a client will send us, you may send us a direction of investment to invest in a real estate syndication, and we just go out and start doing what we're supposed to be doing, but we never let you know that, hey, we got that and we're working on it. So those are the kind of things that we're just, basic, simple stuff, just letting people know that we're here. Because we deal with so many customers and so many large amounts of money, it becomes a number instead of this is Whitney's retirement account we're dealing with. So we have to be careful and do our best to communicate with you. And I think, man, I love podcasts. I've become a podcast junkie, just because a lot of the communication you can, by listening to podcasts about real estate syndication, for instance, I will then be a better investor for you, because I'll know the questions to ask you right off the bat, and I won't waste your time, and I won't waste my time, because I'll already know, okay, this is what I need to know from what I've learned listening to Whitney or listening to other podcasts about real estate syndications.
I agree. And Terry, what's the number one thing that's contributed to your success?
I think probably my faith and my family are the two most important things to me. And, I wake up every morning and think, seriously, Whitney, I wonder how I got here, because I'm I'm not like some, Warren Buffett or anything, but I've been very blessed, and I've got a good business and a great family. So, on a lot of other podcasts, they always say, well, is it luck or is it your brains? And I don't know that I believe in luck, but I think I've been put in a position where I've had a lot of opportunities that I've been able to take advantage of.
No, I agree. I don't believe in luck either. So is there a need in your business right now that you'd like to put out to the listeners?
No, I don't think there is. I mean, we're always looking to educate people. Just off the top of my head, not off the top of my head, but there are about 42 million IRAs in this country, and less than 5% of them are self-directed. So the need for me is to let people know that that's available, and then for them to go get the education that they need to determine if it's something that would be good for them or not.
Maybe you could help me in, like, how do I find those people? How do I market to those people or educate them about how to use their IRA? Or is there a good way for me to connect with those, so many millions?
You mean as trying to raise money for syndications and stuff?
Yes.
Yeah, I don't know. If you figure that out, Whitney, let me know, and we'll market to the same people. We are very careful. We don't allow anyone to market to our existing customers. I get calls pretty regularly saying, "Hey, I got this great thing, and if you'll just connect me with all your people that need to put their money into something." And we don't do that. What I do is I tell them, I can't connect you with my investors because we just don't do that, and we don't think that's an ethical way to do things. But if you find someone that has an IRA, then I can help facilitate them being able to invest with you. So I don't know. I was talking to my CMO this afternoon, our chief marketing officer, about, the age of the people that we have accounts with and how do we market to them and stuff. And man, if I ever figure that out, I'll have the biggest company in the country.
So Terry, before we have to go, how do you like to give back?
You know what? Our company probably 10 or 12 years ago, we made a decision and a commitment to give back a percentage of our profits. And so I'm very quiet about where we give that or what the amount is. But we do that regularly every year. We give back a percentage of our profit to local charities. I really enjoy helping out those people that can't help themselves. So we do a lot of children's charities, and we do some elderly stuff. And then I'm big on helping the people that protect our nation. So we do some stuff with different soldier, military type charities.
Awesome. Thank you for sharing that, Terry. And Terry, you've been a great guest. I appreciate you being on the show.
Yeah, thank you.
Tell the listeners how they can learn more about you and get in touch with you.
Well, there's a couple of things. Number one, they could go to our website, sunwesttrust.com. And if they want to send me an email, they can just go to the contact button on the website and then mention this podcast, so I'll know where they came from. The other thing they can do is they can go to our YouTube channel. We have a YouTube channel called Sunwest IRA, where we have over 230 videos that talk about different aspects of IRAs. They're just short 5 to 7 minute videos. And then the third thing they could do is if they go to our website, they can request a copy of my book about self-directed IRAs, or they could download an ebook there, either one. So those 3 ways that they could find out more about the self-directed IRA industry.
Is the book free?
Yes, it is. It's free, and they can either download it, an ebook, or they can request and we'll mail them an actual hard copy. That's really the only way I'm able to get rid of my book, is giving it away, because I'm not a New York Times bestseller or anything like that. But it's kind of a dry subject unless you're interested in it.
I understand. Terry, thank you again for your time and being on the show. And I appreciate the listeners being with us today. I hope you will go to LifeBridge Capital and connect with me. And I hope you will go to the Facebook groups and network and on the Real Estate Syndication Show group, and we can grow our business together and learn how to use our IRA correctly. So thanks again, Terry. And
thank you, Whitney.
We'll talk to each of you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.